Investor's Edge with Gary Kaltbaum. Straight talk about you and your money. Now from the BizTalk studios, here is Gary Kaltbaum.
And welcome once again to Investor's Edge. I'm Adam Sarhan, in for Gary K, who's out today. Today is Friday, June 27th, 2025, and we have a great show for you tonight. As always, want to thank you very much for being here. Today is the last full week of the month, last full week of the quarter. We have one day on Monday, and then it's the beginning of July. End of quarter, end of month is a really important time to pause, reflect on the last 6 months of the year. The year's halfway over, which is amazing how fast time flies, and plan going forward the second half of the year. I'm going to share with you later in the show something Gary taught me on this show that he's mentioned multiple times throughout the years, and it's Gary's yellow brick road of planning and helping adjust and set goals and a lot of the fun stuff that I've learned directly from Gary over the years. That being said, before we dive into today's show, just give you some overview, some housekeeping notes. As you know, this is a show about you and your money and all the fun points in between, and sometimes not so fun points in between, but we make them fun anyway. Just as a quick reminder, if you don't get this show in your city, you can go to GaryK.com. You can rewind, fast forward, pause, listen on any device, anytime you want, for free, 24/7, all available on GaryK.com. And if you want to follow Gary on X, formerly known as Twitter, you can do that by just pressing the button. You can subscribe, get Gary's morning notes sent directly to your inbox. You can also ask about his money management services, email Gary, or join his convictionleaders.com, which is his premium members-only newsletter where he shares real-time thoughts about the market every day with members, or every market day, gives basically daily market webcasts where he shows charts, he shows stocks, he annotates things, he shows pivot points, gives members pivot points, and a whole lot more. You can take a free trial on Conviction Leaders. All right, all that being said, a few things that we can discuss. The market. What happened this week? It was a very strong week in the market. The NASDAQ 100 earlier this week broke out to a new record high, which I'll get a lot into in a few minutes here. The S&P 500 followed, hit a new high as well, and then reversed on Friday, late Friday, after Trump said that he's going to cut off the trade talks with Canada because of, well, I'll leave the because out. It's all over the news, so you can read it, because he doesn't feel that Canada's got reciprocal tariffs. He wants to cut those down and so on and so forth. Either way, he wants the tariffs gone. And, he stopped the trade talks and wants those tariffs on the U.S. gone is the point that he wants to get done. Let's see. The market was doing well. Then after Friday afternoon, I'm just reading notes from Gary. Trump had a big tariff announcement on Canada. The market sold down and then turned negative late in the day. He said other countries have been fine, and says that deals with China, the UK, and the EU, as well as India, are in the works, or says that he has deals with those countries. We'll see what happens. But the breakout in the major indices are leading. The price is higher for the most part. Again, just reading notes from Gary here. I told you that, let's see, it reminds Gary of 2013 a little, where the first half of the year it was a little jumpy, had a nice bump, and then it just rallied really hard. It broke out and then had a very few good months. No matter what happens, we'll still take it day by day. And of course, we'll let you know as things change. Those are the notes from Gary. So where I'm coming from, my thought process is real simple. When you zoom out, looking at the forest, not just the trees, is really a superpower in this business, because a lot of people get caught up with the news. Intraday action, every 5 minutes, refreshing their phones, their screens, their charts, looking at the news, every tick almost. And what I've noticed over the years, it's important to know what happens, it's going on every day, but it's really important to be able at the same time to zoom out and look at the forest, the big picture, not just get caught up with the day-to-day noise. Why? Because the big trends in the market is where we make the most money. Jesse Livermore, a great speculator from 100 years ago, said it best. And he said, the big money is made in the sitting. In other words, you buy something, it's working, there's a big trend, and let's say you're long in a bull market, you sit. Don't overtrade it. Just sit. As long as it's working, you can make a lot of money doing that. And it's evergreen. It was true then, it's true today, true tomorrow, and true way back when. So the key is to align ourselves with big trends. As we approach the halfway mark of the year, again, Monday's the last day of the year, but this is the last full week, so I'm going to give you the quarter in review and year in review up until now, is really strong. Bearing a little pullback late Friday or some tariff news, but the market was able to shrug off literally every single headline that was thrown at it all year long and hit new all-time highs this week. That's the NASDAQ led, and then the S&P followed. Big tech is a leading indicator for the market. The SMH, which is a semiconductor index, very strong action as well. The financials, XLF, very strong action as well. NVIDIA, one of the strongest stocks in the market, one of the biggest stocks in the market, broke out, hit a new all-time high this week. Again, very, very strong. Apple, surprisingly, which is a big weighted component of the indices, has been under pressure, hasn't yet rallied. If we get a trade deal with China, we had a trade truce or some progress there earlier this morning. Woke up, I saw some headlines there. But once we get some progress there, if Apple gets kicks into gear, the market can really get a leg higher. And some, not just Apple, but other big stocks as well. Now, a few things. Next week is the beginning of the month, July. It's the beginning of a quarter. What happens? You get the jobs report. You get earnings a few weeks after that. You go into earnings season, and you get the latest read on inflation. And then we're going to reevaluate. But for now, going into this halfway mark, pausing, looking at this year in review, you had tariffs. We had a big pullback in March and April, down 20%. But we came roaring right back when Trump gave that 90-day extension. That 90-day extension is pretty much almost over. So the question now becomes are we going to get another extension? Or are we going to get a 180 with the tariffs like what happened with Canada? We don't know. And that can determine what happens with the market. But barring some unforeseen major event, the market is very strong, but extended. That's important to understand, folks. That just because the market broke out to a new high, that's great, but it's also extended. It had a big run. Look at the percent change from the moving averages, the 50, how much higher it is above the 50 or the 200 or whatever it is. They're pretty extended. We can easily pull back a little bit. But stepping back, the action is strong, but extended, right? So strong, but extended. That's a big message. So a few other thoughts. So NASDAQ's leading, S&P followed, Dow a little bit weaker. The mid caps, the MDY, weaker. The small caps, IWM, weaker. Haven't yet broken out. Why? Because those areas are more sensitive to the tariffs, more sensitive to higher interest rates, which, don't forget, the Fed has not cut yet. You want a list of things that have happened this year? You got tariffs. You got the war in the Middle East. You got the Fed that is keeping rates relatively high, has not cut, right? You've got, I can go on and on and on. All the headlines. Everything that came at the market, and markets at new all-time highs. If you just look at the market and nothing else, no headlines, this is really, really strong action. You had a major rally in 2022, the end of it really 23. You came out of a bear market in 22. 21, 22 was a little bear market. 23, the market exploded higher because of AI into 24. And then fourth quarter of 24, Trump wins the election, market goes sideways for the last 6 months, 8 months. Thereabouts, 8 or 9 months. And then today, in June, breaks out to new all-time highs. So when you zoom out, look at the forest is strong. The environment is strong. We're in a bull market. And as Gary says many times, it's the reaction to the news, not the news itself. The fact that we refuse to budge is a bullish sign. If you look on a monthly chart of QQQ or a monthly chart of SPY, the QQQ is the NASDAQ 100, the SPY is the S&P 500. You can see in April, that low corresponded with the old chart high, the high from 2021. That's bullish. And then buyers showed up, boom, market rallied right back up. Sat tight for a few weeks, and then boom, broke out again to new highs. The Qs did, and the S&P 500 did this week. Strong action. But extended. So, zooming out, the environment remains strong. We're in a bull market. There is a high likelihood that this rally continues. Like Gary said, 2013. 2016, 17 come to mind. 18, 19 comes to mind also, where you had a pullback in 15 into early 16, and then boom, market just rallied strong second half of 16 into 2017. I think the deepest pullback was like 3% in the S&P, something crazy low, where it barely budged. That could be happening going forward. I'm not saying that's going to happen, but that's a possibility, right? Anything's possible. We can have a bear market in front of us. That's possible too. The breakout could fail and boom, you can have huge tariffs or war or whatever, and boom. But for now, there's a high likelihood that we can have a very strong second half of the year and beyond. Up next, we've got a lot more to cover. Do the year-end review, some more stocks. We'll talk about sectors. I'm Adam Sarhan. This is the one and only Investor's Edge.
Hi, I'm Gary Kaltbaum, host of the nationally syndicated radio show Investor's Edge. We're not just handsome radio people. We manage investors' money for a living, specializing in fee-based discretionary money management. No big commissions, just a fee on the assets that's managed. We also provide a full range of personalized services, including retirement planning, fixed income, and educational needs, all to assist you in achieving your financial goals. Understanding not all individuals have the same needs, we'll carefully evaluate your personal goals to determine a proper investment strategy. If your current approach to investing is not getting you to where you would like to be, call us to make an appointment for a complimentary portfolio review. The number to call is 888-422-5559. That's 888-422-5559. That's 888-422-5559. Investment advisory services offered through Kaltbaum Capital Management.
It's time to switch on the integrator units and get the brain cells working.
You're listening to
Hey, this promises to be fun.
Investor's Edge
The last bastion of quality programming.
with Gary Kaltbaum.
It doesn't get better than this.
And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can go to GaryK.com, rewind, fast forward, listen anytime at your convenience, 24/7 for free on any device, as long as you have internet. All right, spoke about the forest. We're in a bull market. There's a great book called Reminiscence of a Stock Operator. It was a fictitious book about Jesse Livermore's life, and in it, there's a great story, lots of great stories about how this guy was trading stocks 100 years ago. And he's in the brokerage firm with these old guys and they're talking, and the old timers would say, it's a bull market, old turkey. Why is the market going up? Why is the market going up? We're in a bull market. Plain and simple. News, second. Reaction, price is primary. Price is front and center. Everything else, in my opinion, according, even volume, earnings, the news takes a backseat. Price is primary. And when you look at the action, the price, it looks really strong. Simple. Very, very simple. Why? Because what shows up on your statement? What shows up on my statement? Not the news, not volume, not earnings, not schmernings, not tariffs, not schmeriffs. Price. Simple. It's that simple. Everything else is secondary. Because what determines whether we make money or lose money in this business? The difference between your entry price and the current price in the market. That's it. And the market's a forward-looking mechanism. So here's a bullish case for the next 6 months of the year. A, we get trade deals done. However they pan out, we don't know. The details, like they say, are going to determine the quality of the trades, but providing we make progress on the trade deals and the tariffs go down, not up, that could be a bullish catalyst. 1. 2, even if we have setbacks, like what happened on Friday with Canada, that's okay. Setbacks are going to happen. Trade deals are messy. Deals in general, not all of them are just smooth, especially between countries. But trade deals could come, and that could send the market higher. 1. Second bullish catalyst. The Fed can cut rates, which they've already hinted that they're ready to do in July. Oil prices shot up last week because the war. Guess what? There's a truce. The 12-day war is over, or whatever number of days it was. At least it appears to be over for now, unless if either side breaks the truce. But for the ceasefire, for now, the war's over. What happened to oil prices? Collapsed. Gasoline prices, futures, collapsed. What happens to inflation? I was worried that inflation is going to shoot up because oil prices were extended because of the war. Didn't last more than a few days. Oil prices came crashing right back down. I think, in fact, last I checked, they were lower than where they were before the war started, in the mid-60s. So oil's not at $100 a barrel. If it was, food and energy, that would be inflationary. Guess what? Food and energy, for the most part, are down this week. Good. And they're not elevated, even from the monthly basis. For the most part, you don't see oil at $80 or $90 a barrel. Same with soybeans and corn and wheat and all this kind of stuff. You don't see huge bull markets. In fact, you see downtrends in many of these areas that determine inflation. So if inflation continues to go down, the Fed can cut. I get lots of questions. I had a reporter from Reuters call me today. Oh, it was AP. It was AP called, and they said, "Hey, listen, what's the deal if Trump changes the Fed? Powell's out and he gets someone new." I said, whoever Trump brings in, the Fed has a dual mandate, meaning they have two jobs. One, keep unemployment low, which they're doing. They can check that box. And two, keep inflation near 2%. Last we heard, inflation's higher, and their expectation is it'll be around 3% this year. So the Fed's not really in a rush to cut rates, because if they cut rates, what happens? Inflation might go up, and then they lose control of inflation. Then you get stagflation. You get a situation happen in the 70s and 80s in the U.S. where it was just inflation was rampant, and interest rates had to go up so much. Interest rates now are in the mid-single digits. They were in the teens a few decades ago just to fight inflation. The Fed doesn't want to do that again. So it's taking its time with cutting rates, because if they cut too fast, what happens? Inflation goes higher. That's it. That's their job. The dual mandate. Unemployment low, inflation near 2%. All right. If inflation comes down a little bit, it'll give them room to cut. That can be bullish for stocks. So you've got a trade deal, or trade deals can come out. Bullish catalyst, number one. Number two, you've got continued growth in the economy. We had negative GDP, by the way, earlier this year, and the market's still at all-time highs because the market's a forward-looking mechanism. You can have the Fed cut rates, another bullish catalyst, right? Spoke about inflation possibly coming down, gives the Fed room to cut. The Fed already told us they want to cut twice this year, even with Powell and even with Trump and all the attacks Trump is doing against Powell. Guess what? Fed still said it's ready to cut twice. And if inflation comes down, hey, green light. That can be bullish for stocks. If we don't have a recession, remember many people a few months ago were talking about a recession. If we don't have a recession, that can be bullish for stocks also. So there's lots of catalysts here that can be bullish for the market. Earnings grow. That can be bullish, right? Nike just came out with earnings. This is Nike. They make sneakers. A lot of their sneakers are imported. Last I checked, all their sneakers are imported. I don't think they make sneakers in the U.S., but I'm 99% sure about that. I'm not 100%, so double check that. And what happens? They report earnings, said, yeah, tariffs are a concern. Stock gaps up today, huge, on massive volume. It's up double digits. Average volume is 15 million shares, thereabout for Nike. And we're not double that. We're not triple that. We're several times more than that. Almost 100 million shares, or right around 100 million shares. It's a tremendous amount of buying with tariffs. That's Nike. They're supposed to be impacted by tariffs. Stocks up, huge, or bigly, like Trump would say. So, again, you're in a situation where it's the reaction to the news. Market's a forward-looking mechanism. Sure, the Nike stock was down a lot. Went from 98 all the way down to 52 from June of last year to April of this year. Now it's back to the low 70s. All right, things change. They change quickly. So if the tariffs don't impact earnings and earnings can grow, another bullish catalyst. So zooming out, we've seen this before in 2013. In 15, 16 was bumpy, and then 17 was smooth and just almost a straight line up, with the deepest pullback was 3%. And then 18, 19. 19 was a beautiful year in the market. I think the deepest pullback there was like 4%, or depending on the index that you look at. Huge move up. Then 20 was COVID. You had a 20% correction, thereabouts. And then what happened? Boom, you shot right back up. You doubled 18 months later. The S&P and the Qs. And then you got a little bear market, 21, 22. And then boom, big rally, 24. Paused into 25. And now you're breaking out again. Up next, we've got a lot more to cover. I'm Adam Sarhan. This is the one and only Investor's Edge.
Listening to
America is talking.
Investor's Edge.
He's got to be pleased with that. The crowd is just on its feet here. He's a Cinderella boy.
With Gary Kaltbaum.
Comes highly recommended. You're going to feel better if you talk to him.
And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can go to GaryK.com, listen live or archive anytime you want on any device for free on GaryK.com. All right, a few other thoughts. We spoke about the trees, the forest. We spoke about zooming out. We spoke about the market. We spoke about strong rallies. We've seen this before, like Ray Dalio talks about. It's another one of those. Talks about the importance of studying history. He did. I did. Really powerful. I wasn't alive, and I'm assuming nobody listening was alive, in 1919 when there's a pandemic, the Spanish flu, right? So in 2020, the first time COVID hit, oh my goodness, we look around, not knowing history, the world's never shut down before in the last several decades. You know, I'm alive 40 years, 50 years, 60 years, 80 years, 90 years, maybe some people around 100 years. That's 1925. Okay. I don't remember any pandemics happening during my life. That means it's never happened before, right? Wrong. It's another one of those. Yeah, we've had pandemics before. You hear the plague, right? You know, the Spanish flu, COVID, these things happen. But if you weren't alive, if you didn't study history, you would have no way of knowing. Same with markets. This year, we fell 20% because of tariffs. And then in April, tariffs got kicked down. It basically went away. Didn't directly go away. He just pushed the deadline back, and we're getting close to that deadline, so we'll see what happens. It could be bumpy going forward if the deadline isn't pushed back again, or if trade deals aren't announced. Maybe he gets aggressive now that the market's at all-time highs, and he just says, oh, I have room to go, and he plays hardball again. That could send the market lower. You know, I gave you a bunch of bullish reasons or catalysts going forward. There's bearish ones as well. You know, the market can easily fall. We are expecting some pullbacks along the way. That same reporter that asked me about the Powell and the Fed and the new governor or new chairman, would the new chairman do something different? Possibly could do something different, sure. But the Fed still has a dual mandate. Even if you have a new person, it doesn't change the fact that you've got a dual mandate. The Fed's got to do its job, right? It was about markets and what can send the market lower. Lots of things. Tariffs can come back and Trump can get aggressive because now he's got more room. The market's at all-time highs. So, okay, he can squeeze a little bit. That's one. Two, you can get another war to break out, right? Russia and Ukraine is still happening. The Israel-Iran situation is paused. There's a ceasefire talk, but the conflict's quote-unquote not over. See what happens. Another conflict could arise. You can have a recession. The economy can just contract. Consumer spending is down. Consumer confidence has been falling recently. Housing prices or sales and housing prices somewhat are slowing down a little bit in parts of the country. Again, consumer confidence in parts of the country. So yeah, you can easily get a situation where people get scared and you fall into a recession or you fall into a bear market and stocks just go down. You get more distribution. Recently I spoke about the number of distribution days. There were 7-8 distribution days showed up. Guess what? Market rallied. Great. But if we get more distribution and heavy selling, which we haven't seen since March, that could easily send the market lower. So there's lots of reasons the market can go down. There's always lots of reasons the market can go down. And that's the beauty of this business. They like to say that the market climbs a wall of worry, right? Lots of people worried about this happening and that happening and this happening. And I did that for years. It's not a good trade. Focus on what's happening. Focus on price first. Everything else second. That's it. That'll set you free because that gives you freedom. You're not subjected to someone else's opinion about what's happening. You can make your own decisions based on what the market's telling you. I like to say the market's speaking and then ask, are you listening? All right. So a few things. Spoke about all that, bullish reasons, bearish reasons. Let's talk about the Yellow Brick Road. I started listening to Gary, I think it was 98, 99, somewhere in that time frame on the radio, back when it was AM radio, before the podcast, before everything was digital and so on and so forth. And I was in school at the time getting, actually it was like 2000, 2001, 2-ish, in the early 2000s. I was in grad school and I was driving around. I really parked my car, put the radio on, listen, take notes while he would talk for the hour. And it was a different time for the younger people listening. The Google had just been created. There was no Facebook back then. There was no Twitter, X, LinkedIn wasn't around, so on and so forth. Different world. But I'd listen on the radio, take notes, and he would talk about the Yellow Brick Road and modeling success. Success leaves clues. Right? Tony Robbins talks about this. You've got great people throughout history talk about it. Success leaves clues. Model success, right? If I'm going to want to be the best at something, I'm not going to look at the worst person playing the game. I'm going to look at the best person playing the game. What are they doing different? They're probably doing the work that most other people don't want to do. Well, all right. They're disciplined. But the Yellow Brick Road concept is, what are the goals? New Year's resolutions. Everybody gets excited. Well, just about everybody gets excited about New Year's resolutions in January. Well, we're 6 months later. What are your resolutions? What are your goals? Where do you want to be? Are you where you want to be? Have you met your goals? What action, this is important, have you taken to accomplish your goals? That's key. What action? Because action is what moves the needle. Charlie Munger taught us this. It's not, people don't get what they want in life. They get what they earn. I want a six-pack. Here's a great way of explaining it so people can understand, because most people can relate to this. I want a six-pack. Hey, Adam, how many sit-ups you do today? 0. How many cookies you eat this week? More than 0. Get it? That's it. That's simple. Do you really want a six-pack? It's not my words that matter. It's the actions. I asked my kids, hey, who wants to go watch this new movie that came out? Maybe. No enthusiasm, and it's not a yes. Yes, please. Guess what they're saying? I don't really want to do it. They're saying words like maybe, I don't know, okay, but adulting, right, knowing how to understand human behavior, actions are more important than words. Okay, kids, you want to go? Nah, no, bah, meh, blase, whatever, right? You get the point. It's actions. So I want to get a six-pack. Okay, great. I don't have a six-pack. It's 6 months later. Okay, great. How many sit-ups did I do in the last 6 months? 0. I don't think I've done one sit-up. I walk every day, 10, 12, 15,000 steps, sometimes 17. I just hit 21,000 the other day. It's hours and hours of walking. But I really enjoy it. It's meditative. It relaxes me. I get out in nature. I get to walk, and the weather's nice, so on and so forth. Great. Clears my head. I don't do it in one, 5-hour blocks. I do small walks, but multiple times a day. And it breaks up the monotony of sitting, and I'm not sitting there all day and just sit. I get to move. All right? But if my goal is to get a six-pack, and I'm walking every day, it's not the action that's going to help me get my goal. And that's the Yellow Brick Road, is find the goal, and then figure out what action do you need to take to accomplish that goal, and then reassess. This weekend, sit down with a yellow pad, paper and pencil. You want to do it on the computer, feel free, or any iPad or whatever you want. And I'm going to sit down and go, okay, great. What do we have? What do I want to do? What are my goals? What did I want to accomplish in January? In March, end of the first quarter, I readjust every month, every quarter. Am I on the right track? What actions have I taken? I just heard a great line, shared it with my wife and kids, from somebody speaking, and said that their second grade teacher taught them, if you want to do something, but you're not doing it, that means the first step is too big. Just make the first step smaller. Instead of doing 20 sit-ups or 50 sit-ups, just do one. Every day, just do one sit-up. I can do that job. Okay, great. Or do a crunch, one crunch. I can do that. Whatever the case, I'm just using sit-ups because it's easier for people to relate to it. Now, I could be taking a lot of action. Adam, I'm walking on average. Let me check my phone. Yeah, about 14,000 steps a day is my average. Over the last 7 days, it says? Okay, great. Somewhere around that range. Great. So I've been walking a lot. Weather's beautiful. It's summertime. Great. Guess what? Doesn't matter. My goal is to be healthy and walk. Great. That counts. That matters. But the action I'm taking has to be aligned with my goal. How many sales calls did you make? How many emails did you, so on and so forth. Whatever the goal is. Make sure the actions or the highest ROI actions you can take. ROI is return on your investment. So I can fold socks and be busy folding socks. It's not going to help me get a six-pack or accomplish my goals, unless my goal is to be the best sock folder in the world. That's a low ROI task. Focus on highest ROI tasks. And then make sure I do other things that are aligned with them. Eat right, move, so on and so forth. Whatever those tasks are, but that's the yellow brick road. Get the goal, and then figure out a path to get there, and then periodically check in and make sure you're on the yellow brick road and you get the Oz. Up next, we've got a lot more to cover. I'm Adam Sarhan. This is the one and only Investor's Edge.
You're listening to...
What are we waiting for?
Well, what are you waiting for? 1, 2, ready, go.
Action!
Investor's Edge with Gary Kaltbaum.
And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can go to GaryK.com, rewind, fast forward, listen on any device you want, anytime you want, all for free on GaryK.com. All right, lots covered in today's show. We spoke about the market, spoke about the look at the forest, not the trees, spoke about bullish paths forward, potential bearish ones, but we have bullish catalysts, lots of them that could help the market go higher and possibly move us into a very strong second half of the year and beyond. Like we've seen before, this 2013, 2017, 2019, 2022, 21 come to mind as just strong years. Second half of 2020, strong year. So after you get that big shakeout, that 20% down, which we had in the first quarter of this year, then all of a sudden, second quarter you came roaring back, and now you break out to new highs. So, bearing some unforeseen major event, the environment's strong. A few other things. Canada, U.S., of course, the Trump came out right before Friday afternoon and said the U.S. is going to end the trade talks with Canada because of a digital service tax. That upset him. In the end, I believe a deal will get done. You're going to have some back and forth, and you might raise tariffs again and this and the other thing. But if you just look at things historically, deals between nations tend to take time. And sometimes they're bumpy or they're messy or so on and so forth. And there's lots of other deals that are coming up, behind this as well. So a few other things. Let's talk about this morning, woke up to some news. China confirms detail of the U.S. trade deal. So there's progress there. And the trading partner, China, is much bigger than Canada. But so far, we'll probably get, if I had to guess, a deal done with Canada at some point. How long it'll take and how bumpy, who knows. But the market, just again, focus on the market, remains very strong. Extended, but strong. So a few other points. We spoke about the yellow brick road, doing some post-analysis on the trades is the last thing I want to cover in the last few minutes that we have remaining here. We spoke about this before. It's a really powerful tactic to use to get an insight at your own behavior, and a powerful tactic to help you find clues on how you can improve. We all can improve. We're humans. We all make mistakes. That's okay, providing we learn from them, we study them, almost fall in love with our mistakes so they don't keep repeating over and over and over and over and over again, like I did for so many years, right? Because I didn't want to take the time to do this post-analysis. What is post-analysis, you might ask? Real simple. Print out or take screenshots of all your trades, put them in two folders, W and L, winning folder and losing folder. All my winning trades, all my losing trades. Each trade, where I entered, where I exited. And then the reasons why. What was I thinking at the time? If I can't remember, that's great, that happens. If I can't remember, great. Entry, exit. Did I buy late? Did I chase? Did I have FOMO? Notice the language. Fear of missing out. Fear. Emotion. Emotions drive most of our decisions, not logic. We think we're logical humans. Most people I speak to, yeah, I'm logical. But when it comes to making decisions, there's biases. There's cognitive biases. You can Google it if you want. There's lots of them. But one of them is a personal blind spot bias where you can't see yourself objectively. Meaning, you ask 100 newlyweds, get them together the night of their wedding. Raise your hand if you think you're getting divorced. Nobody's going to raise their hand. Yet statistically, we know half of them are getting divorced. That's a bias, right? I speak to people, investors all over the world, and I've interviewed over $1 trillion on my podcast, Smart Money Circle. You can go on YouTube or Spotify or wherever you listen to podcasts. SiriusXM just picks up the show, and I want it's time. The whole idea is to get timeless advice. CEOs of publicly traded companies and big money managers, and we're humans. And when I speak to these investors, hey, raise your hand if you think you can beat the market. Everybody raises their hand and think they're going to beat the market. Yet we know most people don't beat the market. Why? Emotions. They make emotional decisions. There's no structure. They don't want to take the time to do the post-analysis, to do the work, the yellow brick roads. What are my goals? Am I meeting my goals? How can I improve? What mistakes am I making trading? It's very easy to hide those mistakes. No one's really looking, unless if you work for a firm or something. But, most people listening, it's easy for people to hide mistakes. Embrace them, look at them, befriend them, make them your friends so they stop happening over and over and over and over again. So the winners and the losers, and then I look for patterns in my own behavior. And it becomes clear after looking at all the trades you did this year or the last 12 months or the last 24 months or 36 months or whatever you want to do. You'll start and then keep going throughout the rest of the year, next year, the year after. You'll start looking and you'll see patterns. Oh man, I thought I'm buying right, but it turns out I'm chasing, or I'm buying too early, or I'm buying too late, or. And then whatever you learn, those things become extremely powerful. Extremely powerful. Because you can improve. That's the beauty of what we're doing. This is a performance-based business. We all get paid based on our performance. The ones that perform very well, like Steve Cohen, he could buy the Mets, literally, because of his profits from trading. Very few people are in that top echelon, the top 1% of traders and investors. Most people aren't able to break out of those loops. They're still making emotional decisions. They think they're making logical ones, so on and so forth. And the idea is to be able to upgrade the user. Just like we upgrade our cell phones, upgrade our computers, upgrade the software, we want to upgrade our thinking, upgrade the decision making, because all that matters is the quality of our decisions. We make better decisions. Guess what? Things tend to be better. If I make a lousy decision, another lousy decision, yeah, I'm not going to really have a good outcome most of the time. Again, I'm speaking generally, right? There are exceptions, I get it, but in general. So you take the time to study your behavior, study your mistakes, learn from them so we don't repeat them. Guess what? You can improve. You can stop making those decisions over and over and over again that you thought were logical. They might be emotional, and boom, there's a breakthrough. Or you detect other patterns, breakthrough, right? The idea is there's breakthroughs. How do you learn? You got to look. And it's not fun. Nobody wants to do the sit-ups. At least I don't want to do the sit-ups. Not nobody wants to do the sit-ups. Most people don't. Some people do, and they have a six-pack, right? Same with the trading, with the investing, with any performance. So as we put the pieces together, so that's that piece about the post-analysis. You've got strong action in the market. We're extended. Let's see what happens. Take it one day at a time. Have a great weekend, everybody. I believe that's all the time I have for today. This is the one and only Investor's Edge. I want to thank you very much.
This has been Investor's Edge with Gary Kaltbaum on BizTalk. To listen to past episodes or to get in contact with Gary, go to GaryK.com. That's GaryK.com.